in the activity analysis, after discussing about the ratios like inventory turnover ratio, accounts receivable turnover ratio, accounts payable turnover ratio, operating cycle, and cash conversion cycle, to see the efficiency of the business, we should also find the efficiency in utilizing its assets, including working capital. Therefore, the amount of sales should be expressed in terms of working capital. The amount of sales should be expressed in terms of working capital, which means how effectively the working capital is used to make more sales. So, what we need to see is the minimum amount of working capital should be utilized to maximize the sales. Likewise, an asset used in the business should help us to make more revenues. More revenues, more good. Therefore, we should find this efficiency using working capital turnover ratio, working capital turnover ratio explains the efficient usage of working capital to make sales. Higher the ratio, higher the efficiency. Okay, formula. Working capital turnover ratio equals to net sales divided by, whenever income statement is expressed in terms of balance sheet items, you should use average working capital. Net sales divided by average working capital. It tells you that every $1 of average working capital used to make sales. So $1, $3 sales. Your competitor company, $1, $3.5. So your efficiency is not good. You are not, using working capital properly. Say for example, $3 of sales for every $1 of working capital used. When you compare the same ratio with your competitor, $3.5 of sales for every $1 of working capital used. This way we can see that what amount of sales are generated by maintaining an amount of working capital. So you will have some targeted figures that my sales should be at least three times of working capital. So the moment you calculate working capital, you will see whether 3 times of working capital is there in your net sales or not. If it is not there, it means that the working capital is not utilized as you planned. Likewise, a company likes to know how best the assets are used in the business. There will be some ideal assets, there will be some ideal assets. Ideal assets will reduce the efficiency and ideal assets will improve the efficiency. Ideal assets means the assets are effectively used, means to maximum extent we are making use of it to make more sales. That is called an ideal asset. But ideal asset means asset is there just balance sheet purpose but no use in making sales. That is total asset turnover ratio. Efficient usage of total assets. Total assets. Here also the ratio should be preferably higher. Higher, how much higher we can't say. There will be an industry average. Like this kind of business, this asset is used this way. Say for example, in the case of retail industry, your more amounts will be higher portion of assets would be in current assets. In the case of manufacturing industry, the higher portion of the asset would be in fixed assets. So there the total asset turnover ratio will be again classified into fixed asset turnover ratio, that how best fixed assets are used to make more sales. So I will write here total asset turnover ratio, average total assets. If at all the question is fixed asset turnover ratio, note if fixed asset turnover ratio is given, then the formula would be net sales divided by average fixed assets. So you'll have to see the formula or question properly. But total asset turnover ratio will be asked mostly. But if at all fixed asset turnover ratio is given, take the average of fixed assets and find it. And it will be giving you in a times, number of times, we made net sales, right?